Let me ask you a straightforward question. Where in the world can you buy a property, collect rental income, pay zero tax on that income, sell at a gain, also tax-free, while the underlying economy is growing faster than most of the group of 7? That's not a hypothetical. That is the UAE in 2026. And I'm not saying that to sell you something. I'm saying that because the data says it. In this video, we're going to go through the data carefully, layer by layer, so you can make an informed decision about whether this market belongs in your portfolio. We are going to cover the macroeconomic picture, gross domestic product growth, the purchasing managers index, interest rates, and inflation. Then we'll break down Dubai and Abu Dhabi individually because they are two distinct markets with two distinct investment profiles. And we'll close with what I think is the actual opportunity window here and how to think about timing. If you're an investor who makes decisions based on numbers and fundamentals, not hype, this one is for you. The gross domestic product story. Let's start at the top. UAE real gross domestic product growth went from 3.9% in the first quarter of 2025 to 4.5% in the second quarter and then accelerated to 6.8% in the third quarter. That's not a fluke. That's an economy picking up speed through the year. Looking forward, the Central Bank of UAE projects 5.6% real gross domestic product growth for both 2025 and 2026. The International Monetary Fund, which revised their number down to 3.1% in April 2026 after global trade headwinds, still places the UAE well above the global average. There is divergence between those two forecasts. The non-oil economy is forecast to expand by approximately 5.3% in 2026. That tells you this growth isn't dependent on oil prices, it's structural. The Purchasing Managers Index signal is one of the cleanest real-time indicators of business activity. Anything above 50 means expansion. Anything below 50 means contraction. The UAE has been consistently above 50 every single month. The expansion threshold at 50 hasn't been touched. What this tells me, business activity on the ground is robust. Companies are hiring, ordering, producing. That creates demand for commercial space, residential units, and broader ecosystem around real estate. Trade and foreign investment. Non-oil foreign trade grew 26.8% to reach 3.8 trillion dirhams in fiscal year 2025. Non-oil exports specifically were up to 45.5% to 813.8 billion dirhams. And foreign direct investment came in at 167.6 billion dirhams in fiscal year 2024, a 48.5% increase. The UAE ranked number 2 globally for greenfield foreign direct investment by project count, attracting $33.2 billion in fiscal year 2025. That is global capital voting with conviction. The economic foundation. Dubai's gross domestic product stood at 355 billion dirhams for the first 9 months of 2025. Real gross domestic product growth was 4% in the first quarter, 4.7% in the second quarter, and 5.3% in the third quarter, accelerating through the year. What drives Dubai? Look at the sector breakdown. Wholesale and retail trade is the single largest contributor at 24% of gross domestic product. Financial and insurance services, real estate, construction, and information and communication technology together account for significant shares. This is a service economy, and services economics need workers, and workers need housing. The real estate numbers, first quarter 2026. Now let's talk about the actual transaction because Dubai's property market just posted numbers that even for someone who follows this closely are striking. In the first quarter of 2026, total resale transaction in Dubai reached 252 billion dirhams. That's a 31% year-on-year increase in value. The Dubai Land Department confirmed these numbers officially. Residential sales specifically were 176.7 billion dirhams across nearly 48,000 transactions in the first quarter alone. And January 2026, 1 month recorded 72.4 billion dirhams in sales, the highest single month in the history of Dubai real estate, a 63% jump year on year. Let me put that into perspective. 1 month, 1 city, 72 billion dirhams. That is not a speculative market, that is sustained structural demand. Price appreciation. The median price per square foot across Dubai's sales market reached 1,770 dirhams as of March 2026, a 14% year-on-year increase. Transaction values overall rose 23.4% year-on-year. Over a 5-year window, prime residential property prices in Dubai are up 193.9%. That's nearly triple. Knight Frank's 2026 World Report confirmed Dubai ranked second globally for prime residential price growth, with a 25.1% increase over the past year. And it's not just volume and prices. The total composition of buyers is changing. In 2021, there were 113 transactions above $10 million in Dubai. In 2025, that number was 500. The ultra-high net worth segment, individuals with assets exceeding $30 million is growing rapidly in the UAE, with projections showing a 36% increase to 6,588 ultra-high net worth individuals by 2031. December 2025 saw Dubai's most expensive residential transaction ever, a $150 million penthouse. That's a data point about where this market sits on the global luxury spectrum. Foreign investment in Dubai real estate reached 148.35 billion dirhams in the first quarter of 2026, a 26% increase, with 48,445 individual foreign investments, up 11%. British, European, South Asian, and North American buyers are all active. Zero income tax, zero capital gains tax, flexible ownership laws, and a lifestyle that competes with any global city. These are pull factors that aren't going away. My read on Dubai. Dubai is no longer the emerging market story. It's a mature, liquid, internationally recognized property market. The question for investor isn't whether Dubai is real. It clearly is. The question is where within Dubai you get the best risk-adjusted return at this stage of the cycle. Off-plan continues to dominate demand. Luxury waterfront and branded residences are being absorbed quickly. If you're looking at Dubai, understanding micro-location and the developer quality matters more than ever in this phase of the market. A different market thesis. Abu Dhabi often gets overshadowed in the conversation because Dubai has the louder brand. That's actually, in my view, part of the opportunity. Abu Dhabi's gross domestic product was 923 billion dirhams for the first 9 months of 2025. Real growth was 3.4% in the first quarter, 3.8% in the second quarter, and 7.7% in the third quarter. That third quarter number is notable, 7.7% in a single quarter. Abu Dhabi's economy, which still derives 54% of its gross domestic product from hydrocarbons, benefits from oil revenue stability, while its non-hydrocarbon sector is actively diversifying. The real estate fundamentals. Abu Dhabi's total real estate transactions in 2025 reached 142 billion dirhams, with residential sales at 76 billion dirhams. Rental yields sit at 5 to 8%, which is zero income tax environment, means you keep all of that. For 2026, residential capital values are projected to grow between 8% and 16%. The wider range reflects different analyst assumptions, but the direction is ambiguous. The office market is even stronger. Rental growth of 20% is forecast for Grade A office space, driven by severe supply constraints. Where to look in Abu Dhabi? The areas are generating the most investor attention right now are Reem Island, Saadiyat Island, and Yas and Hudayriyat Islands. Expected returns in 2026 are forecast at 9 to 12% on Reem Island, 9 to 12% on Saadiyat Island, and 8 to 10% on Yas and Hudayriyat. Saadiyat in particular is interesting from positioning standpoint. It's where the Louvre Abu Dhabi sits, where the New York University Abu Dhabi is, where the Guggenheim Abu Dhabi is under development. Cultural infrastructure of that caliber elevates real estate values. It's not a coincidence that prime markets in Paris, New York, and London clusters around cultural and educational anchors. The supply constraint factor. What's driving yields and price appreciation in Abu Dhabi is partly structural. Supply is disciplined. New deliveries are expected to be approximately 6,500 units in 2026 against a much wider demand pipeline. When supply is constrained and population is growing, which it is, driven by talent inflows and business-friendly visa policy, yields hold up. My read on Abu Dhabi. Abu Dhabi is more conservative play, lower volatility, steadier yield profile, and the backing of sovereign wealth that gives the broader economy an extraordinary level of stability. For investors who want income yield with capital appreciation upside, Abu Dhabi deserves serious attention, especially because it hasn't priced as aggressively as Dubai yet. Why the data converges on one conclusion? Let me pull this together, because when you look at all of this data simultaneously, a picture emerges. You have an economy with gross domestic product growth between 3.1% and 5.6% depending on the model you use, both above the global average. You have a purchasing managers index that has been in expansion territory consistently. You have low, stable inflation. You have a base interest rate that's been held steady, meaning financing conditions are predictable. You have non-oil trade exports growing at 26 to 45%. You have a foreign direct investment inflows that make the UAE the second largest recipient of greenfield investment globally. And then you layer real estate on top of that. 252 billion dirhams in transaction in 1 quarter in Dubai alone. Foreign investment up 26%, prices up 14% year on year at a median 25% in prime segments. Abu Dhabi yields at 5 to 8% tax-free, off-plan demand outspacing ready stock. And this is not a single data point. This is convergence across macro indicators, capital flows, and transaction data, all pointing in the same direction. The risk picture. I won't pretend that there are no risks. The International Monetary Fund's downward revision to 3.1% gross domestic product growth reflects real concerns about the global trade and geopolitical uncertainty. The UAE, despite its diversification, still has exposure to oil price cycles through Abu Dhabi, and any real estate market that has seen price appreciation of 193% over 5 years require a disciplined approach to entry. You need to buy well, not just buy. Off-plan carries developer risk. Liquidity in certain segments is thinner than Dubai's marketed image suggests, and exchange rate risks exist for investors holding non-dirham currencies who are purchasing dirham-denominated assets. Acknowledging risk doesn't weaken the thesis, it sharpens the approach. What this means for you as an investor. The fundamentals support the UAE as a core allocation for a real estate investor looking at the next 5 to 10 years. The macro underpinnings are real, the capital flows are real, the transaction volumes are real. Where I see the most interesting risk-adjusted opportunities right now, Abu Dhabi's emerging district with disciplined supply and strong yield fundamentals. Dubai's mid-market off-plan in growth corridors, not just the premium names, and the commercial and office sector in Abu Dhabi, where the rental growth of 20% in Grade A space is exceptional. The window to enter reasonable valuation relative to where this market is heading does not stay open indefinitely. When you have 72 billion dirhams transacting in a single month, the market is telling you something. That's the picture. UAE gross domestic product accelerating, Dubai posting record transaction volumes, Abu Dhabi offering some of the strongest yield fundamentals in the region, foreign direct investment confirming what the transaction data shows, and a macro environment with low inflation, stable rates, and diversifying non-oil growth that supports the thesis. My name is Vanya, and if any of this resonates with where you're looking to invest, or if you want to go deeper on any of these numbers and understand what they mean specifically for your situation, let's catch up. Whether you're just starting to explore the UAE market or you already have assets here and want to think about what comes next, I'm happy to have that conversation. Link in the description. Talk soon.